Hey everybody, a lot of people have been asking me for my thoughts on Redfin's latest earnings. The stock is down considerably in recent weeks, and I wanted to give my thoughts. Before I do that, please take a minute and click subscribe to my channel. Check out the link you see on your screen. It's a message from my sponsor, The Motley Fool. It's the best way to support this work I'm doing on YouTube. You can get the top 10 stocks to buy right now. So, in the fourth quarter, let's just start with some of the headline numbers. Uh, their revenue dropped 2% year over year. Gross profit was up. They did lose money. They posted a net loss of about $23 million for the quarter, but that was as opposed to a loss of $62 million in the same quarter a year ago. On an adjusted EBITDA basis, remember, Redfin had actually achieved adjusted EBITDA profitability in the latter half of 2023, before the fourth quarter. But it did post an adjusted EBITDA loss of about $13.5 million, but that's compared with a $40.2 million loss in the fourth quarter of last year. Overall, for the full year, revenue was down 11%. The real estate market was pretty weak. Gross profit was up 7% as the business became a little bit more efficient. Posted a net loss for the full year of $130 million and a full year adjusted EBITDA loss of $76.4 million. So the real problem is that the real estate market is staying worse than expected for longer than expected. Mortgage rates are elevated. A lot of people, they dropped toward the end of 2023 and started 2024 pretty favorably for home buyers. They dropped to the low sixes, I believe, at one point. Uh, but it looks like the Fed is going to have to keep interest rates higher for longer than expected. That's put upward pressure on mortgage rates, and we're seeing that right now. So mortgage rates are higher than people thought they'd be. That's made the housing market worse than expected. In the fourth quarter, mortgage rates were very elevated and inventories were very low. The fourth quarter is a seasonally weak time to be, selling a house anyway. Glenn Kelman, this Redfin CEO, called the market dreadful, which is a pretty strong word to use from someone who's generally optimistic about real estate. Um, the key takeaway to all that is that it's going to make it a little bit tougher for Redfin to reach its profitability goals. It was about a year ago when Kelman said that the company was going to be adjusted EBITDA profitable in 2023 and then GAAP profitable in 2024. That's in honest terms, it's probably not going to happen. Adjusted EBITDA, I mentioned, went negative in the fourth quarter because the real estate market was pretty terrible. The business got more efficient. That's the good news. Net income this year is going to be a big stretch. If the market rebounds significantly during the peak, like spring and summer selling seasons and stuff like that, it's possible they could hit it for a quarter or two, but I really don't see it on a full year basis. If they can make significant profitability by the end of the year, that would be very nice. Um, Within the business, a lot of the initiatives from Redfin are starting to pay off, but are still in the very early stages. The pay structure that it rolled out, the Redfin Next, I believe it's called, the pay plan. It started in Los Angeles and San Francisco. They had a lot of success. They rolled it out in San Diego and Orange County. They plan to roll it out in 7 new markets in the second quarter. Essentially, it's a really generous compensation plan designed to lure some of the best producing real estate agents away from other brokerages and make them Redfin agents. Very successful so far, but like I said, still in the early stages and not really reflected in the numbers yet. Another program they're doing is to give customers refunds uh, to people who hire Redfin agents after their first home tour. I think they get 0.5% of the selling price back at closing as a rebate if they do that. That initiative just expanded nationwide on February 1st. It was just in a few markets being tested out in the fourth quarter. So again, not really reflected in the numbers, but the results are positive. So it's an optimistic sign for the future. Loyalty is continues to build. 36% of Redfin customers are repeat customers, which is pretty impressive. Um, just looking at some of the stats, 49 million active users to Redfin's mobile app and platform in the quarter. That's pretty much flat year over year, which is impressive in a terrible real estate market. The market share of existing homes Redfin captured is at 0.76%. That's down 4 basis points year over year. mainly because of headcount reductions, not because anything's wrong with the business itself. They're not losing market share based on the number of agents they have. They're doing a better job of attaching mortgages to their home sales. 25% of buyers through a Redfin agent used a Redfin mortgage. Remember, they acquired Bay Equity home loans not that long ago. Looking forward, in the first quarter, management doesn't exactly have very optimistic expectations. They're expecting revenue to essentially be flat. They're expecting a pretty sizable net loss, and they're expecting an adjusted EBITDA loss that's significantly wider than we saw in the fourth quarter. So the fourth quarter and first quarters are the seasonally weakest times in the real estate market. So keep that in mind when you when you hear those numbers. The second quarter is in the spring when people start listing their houses. A lot of people want to move during the summer. That's when their kids are out of school. It's just generally easy to move for a lot of families. So the next two quarters are going to be the most crucial, or meaning the next two quarters from when I'm recording this, the second and third quarters of 2024 are going to be the most telling. There's a lot that has to do with the timing of Fed rate cuts. Right now, the median expectation is the Fed is going to start to cut the federal funds rate in June, which generally has great, significant downward pressure on mortgage rates. If those happen more aggressively than expected, it would be probably a very positive catalyst for Redfin. But the timing of those rate cuts and how they trickle down into the mortgage market should be a good thing. Whether hopefully we can avoid a recession, that also has a lot to do with it. So all in all, I thought these were decent numbers given the environment. I think the real value in Redfin is growing its market share over time, capitalizing on adjacent services it can offer, being able to recruit the best talent. The kind of war on fees in the real estate industry is the big X factor that is why I'm an investor in the stock over the next few years, especially. Um, if you're not familiar, there was a lawsuit against the National Association of Realtors and a few of the major brokers in the U.S., essentially accusing them of price fixing for forcing the home sellers to pay for the buyer's agent. The argument being, if the buyer had to pay for their own agent, would they really hire one? Would they be willing to pay 3% of the home's price just to have an agent in their corner? The answer is probably no. Redfin is set up really well to thrive in a fee competitive market environment. Buyers are just becoming aware of kind of the antiquated fee structure we're seeing in real estate. That's my big bull thesis for Redfin going forward. Is that as consumers become aware of fees, especially if these lawsuits are upheld, they're in appeals right now, and buyers agents either go away or become much more rare. Redfin and its platform are set up to kind of help facilitate the sale price without the use of an agent or with minimal use of an agent, where they won't have to charge 3%. They can charge significantly less, which is kind of the idea between Redfin selling agents. So that's why they charge half of what the typical broker does already. Redfin has been competing on fees for years and years. They were a little bit early. It turns out just because consumers weren't very fee aware. I mean, if you're buying a house, but the seller's paying for your agent, what do you care what they cost? And that's kind of been the way of the market for a long time. As that gradually changes, which it's really starting to change now, I think it's going to be a very positive catalyst for Redfin and its market share going forward. The real estate market it's entering a very transformative couple of decades, and I think Redfin is well positioned to succeed. So the recent numbers, not fantastic, but nothing to be totally alarmed about. Be watching the rest of this year, particularly that spring and summer selling season. See if we can get kind of some normalization happening here. But all in all, I'm going to be watching this, and I will check back with you next quarter. I'd love to hear what you think. Any questions, I'll do my best to answer them individually. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.